At its absolute height, a trading entity commanded an inflation-adjusted valuation of roughly $8 trillion. To put that in perspective, you would have to combine the modern market caps of Apple, Microsoft, Google, Amazon, and Facebook to equal that sum. Yet this astronomical wealth did not come from technology, software, or heavy industry. The entire enterprise rested entirely on the global transport and sale of dried tree bark and tiny brown seeds. The Dutch government handed this operation a terrifying degree of authority. It could legally declare war, raise standing armies, and execute individuals without trial. It was even physically minting its own currency, as you can see on this 1735 copper coin bearing the company's monogram. This behemoth was born in 1602 out of sheer economic necessity. Several competing Dutch trading ships were burning through capital in a vicious, destructive price war over Asian spice routes. To stop the bleeding, the state stepped in and forced the rivals to merge into one massive syndicate, the VOC. To finance this massive new entity, the Dutch devised a novel solution. They offered shares of the trading voyages to the general public. Bakers, widows, and local shopkeepers suddenly had a way to buy a fractional piece of a global shipping operation. The result was a completely new type of organization, a publicly traded business entity operating with the lethal, sovereign authority of an independent nation-state. The core of this entire operation was nutmeg. European buyers mistakenly believed these raw seeds held near magical medicinal properties, driving the price per pound far beyond the value of gold. And those highly coveted seeds only grew in one specific location on Earth, the Banda Islands, a remarkably isolated tiny cluster of volcanic rock in what is now Indonesia. In 1621, a man named Jan Pieter Zoon Koon was appointed governor-general with a very clear mandate. He was ordered to secure absolute, total control over those islands, regardless of the human cost. Company forces swept through the archipelago to eliminate any local leaders who dared trade with other European buyers. In a matter of months, a population of roughly 14,000 people was reduced to barely 1,000. The company then repopulated the area with enslaved laborers to run their newly acquired plantations. The centuries-long track record of the VOC's shareholder returns rested entirely on this specific foundation. The company achieved its global market monopoly through mass violence and forced labor, shutting down free market competition at the end of a musket. Other European merchants approached the Asian market by loading ships with silver, buying goods, and sailing home, a painfully slow process that actively drained Europe of its precious metals. This flowchart demonstrates the more efficient system the Dutch built. Instead of relying on European silver, the VOC used their existing capital and ships already stationed in Asia to buy cheap regional goods like Indian textiles. They would then sail to a different Asian port and sell those same textiles at a massive markup. The local profits from that regional trade loop were then used to purchase the expensive spices. By the time a Dutch ship finally sailed back to Amsterdam, its cargo had already paid for itself several times over before ever leaving Asian waters. Combine a violent monopoly with this self-funding, high-speed trade loop, and the math becomes staggering. The company paid out an average annual dividend of roughly 18% every single year for nearly 2 centuries. The men managing those returns were known as the Lord 17. This board of directors held absolute authority over the company's books and flatly refused to publish transparent financial records for their investors. That lack of oversight extended all the way to their outposts. 12,000 miles away from Amsterdam, company employees quickly realized no one was auditing them. Smuggling, bribery, and loading private cargo onto company ships became an ingrained part of daily operations. This graph displays the precise moment the financial model broke. Look at the 1730 mark. The operating profit line dips dramatically, yet the dividend payout line remains totally flat, hovering above actual earnings. To keep paying that 18% dividend and maintain the stock's appearance, the Lord 17 simply borrowed the money. Borrowing cash to pay shareholders unearned dividends is not a sustainable corporate strategy. It is the deliberate, slow-motion draining of a business to keep a myth alive for investors. A monopoly sustained by force has one glaring weakness. It only holds up as long as nobody else figures out how to grow the product. In the 1770s, French smugglers managed to steal live nutmeg seedlings and successfully plant them on the island of Mauritius. As the artificial scarcity of nutmeg evaporated, the VOC found itself hopelessly outmaneuvered. Their primary rivals, the English East India Company, had long since pivoted away from spices, building a far larger, modern revenue stream on Indian textiles and tea. Then came the Fourth Anglo-Dutch War. Throughout the 1780s, the British Royal Navy systematically blockaded Dutch trade routes and shattered the VOC's fleets. By the middle of that decade, the company's outstanding debt had skyrocketed past 100 million guilders. Without the revenue to service that massive liability, the company survived only through a continuous string of emergency bailout loans from the Dutch state. There was no explosive collapse or dramatic final board meeting. In 1796, a new Dutch government looked at the horrific balance sheets and nationalized the company. On December 31, 1799, the charter simply expired. Generations of investors were left holding completely worthless paper. Every single asset that built the empire directly caused its failure. The violent monopoly created extreme corporate fragility. The fast, unaccountable leadership enabled half a century of hidden borrowing. And the famous 18% dividend systematically hollowed out the balance sheet. Today, you have to wonder how many modern corporations pay out more than they actually earn, slowly draining themselves dry just to keep the story alive a little longer.